What's up, everybody? This is Sunko, the Korean Bro. Today is 2024, February 13. And let's see, okay? Mm. Here are three phenomenal reasons to buy PayPal stock right now. Investors who weren't pleased with the guidance PayPal's management team provided. PayPal continues to grow its payment volume, supporting the company's network effects. The stock's current valuation makes it a screaming buy. Reported fourth quarter 2023 revenue of $8 billion, adjusted earnings per share of $1.48, both headline figures that beat Wall Street estimate. So it makes you scratch your head. See that shares are down 11% the day following the news. Investors are forward-looking market participants, and they weren't happy with the company's guidance. People's executive expect revenue to rise by just 6.5% to 7% in the current quarter, with just EPS up single digits. The situation makes matters worse for the fintech stock, which is currently 82% below its all-time high. However, I view this as a phenomenal buying opportunity. Here are three reasons why: growing payment volume, powerful network effects, and compelling valuation. So, since the start of 2023, the Nasdaq Composite Index has returned 51%, thanks to the resurgence of many growth tech stocks. Unfortunately, PayPal missed the wave. In fact, PayPal stock is dirt cheap right now. It trades at a price earnings ratio of just 16.8. This looks like an absolute bargain. The depressed valuation might suggest that this is a terrible business. But that's not just true. PayPal not only continues to grow TPV, it has a clear competitive advantage. Maybe even more importantly, this is a financially sound enterprise. It generated $4.2 billion of free cash flow in 2023. A typical occurrence. PayPal also has a superb balance sheet with a net cash position of $6 billion. Okay. Mm. After doubling in 5 years, Home Depot may be the best bargain for 2030 returns. 5-year run. See, Home Depot marries market resilience and growth potential. Okay, let's read this one, okay? Home Depot. Investing in top tier companies for 5 years or longer is a proven wealth building strategy. Home Depot, the go to spot for home improvement needs, managed to double its market value in just 5 years despite facing some serious challenges. A success story might just be getting started. Mm. Making Home Depot an exciting pick for the next decade. So Home Depot has shaken up the home improvement game since it went public, becoming an ally for business and the homeowners taking DIY projects of all sizes. Thanks to a stellar lineup of products and services tailored for every project, Home Depot and its markets seem ripe for delivering more. Statista Research predicts the U.S. home improvement scene will balloon to a new jaw-dropping $621 billion by 2025, jumping from a $485.7 billion in 2020. Even with all the recent global disruptions and inflation wars, Home Depot stood its ground, only seeing a small 3% dip in sales to $37.7 billion year over year in the third quarter of last year. The little drop just shows how solid Home Depot's spot in the market is and how it keeps customers coming back no matter what. So Home Depot's stock price shot up from about $140 in early 2020 to whopping $365 this year. An impressive fit for any company. Investors keep showing they've got faith in how Home Depot does business. It's all about those strategy moves, understanding what customers want, and being quick on a draw when the market throws a curveball. And let's not forget where it all started: a humble $12 IPO in 1981, not counting stock splits and without even considering inflation. Come a long, long way. Beating challenges with diversity and expansion, Home Depot's faced some serious challenges over the years, from a supply chain hiccups to fierce competition. Let's not forget the global pandemic. But the home improvement giant may have a last then secret weapon: diversifying the supplier network. The move keeps the goods flow smoothly, even when things get rocky worldwide. During the height of pandemic chaos, Home Depot didn't just sit back and watch. It went into proactive mode, expanding its supplier base to help make sure stores never ran short and keep up with the demand. Home Depot also beefed up distribution channels, making sure products got to stores and customers' doorsteps ASAP. Investing in logistics keeps the customer experience top notch. And Home Depot is not just about DIYers anymore, it's got eyes on the pros too. By catering to both crowds, Home Depot keeps focusing on revenue and cementing its spot in the home improvement game. It's like the company has cracked the code, staying steady in a market that's always up and down by balancing the needs of casual DIYers and seasoned professionals. Home Depot's innovation at the fore. Home Depot has always been a trendsetter when it comes to shaking up the retail game with innovation. It's invested heavily in AI and e-commerce, totally changing how buyers shop. Think easier and product searches, integrated assistance, and faster checkouts when the pandemic hit. The digital first strategy proved to be another game changer, making online shopping simpler and setting the stage for even more digital growth down the line. Home Depot's financials look pretty solid. Looking into its four price earnings ratio of 23, analysts appear to be feeling pretty good about where Home Depot is at. The trailing ratio sits around 18, too high. A PE ratio and stocks appear overvalued and not currently worth the pickup price, but challenges mentioned earlier help bring down the company's ratio to indicate reasonably priced shares. But analysts and current shareholders are not just thinking about the company's earnings, they're also batting big on its future potential. And Home Depot appears to be a pretty sweet deal for anyone looking for a bargain while eyeing future returns. Hmm. Paycom, Popmatic, Paycom Software, and Popmatic. What are they exactly? Hmm. Paycom Software, the best companies are willing to break a few eggs to make an omelet. Paycom has built its reputation over decades on making life easier for its customers. The company's human capital management platform requires little configuration, is user friendly, and covers a wide range of functionality. Its features free clients from the pain of cobbling together multiple point solutions. Okay, I get it. So it's basically like a human resource management system or whatever. Hmm. And next we have Palmatic. The digital advertising market is starting to bounce back following sluggish year. Social media giant Meta platforms reported a robust 25% year-over-year revenue growth in quarter four, driven partly by a 21% rise in ad impressions and 2% rise in average ad pricing. Palmatic, which operates a sell-side digital advertising platform that helps publishers and app developers monetize their content, has felt some pain in recent quarters. Okay. Actually, here we have an article about Tesla. Should you buy Tesla while it's under $200? Even after investing for growth, Tesla generated $4.4 billion in free cash flow in 2023. Its energy segment generated over $6 billion in revenue last year. Tesla is still investing for the future as EV demand is still increasing. So, okay, the EV market has its challenges, but that might be just what Tesla wants right now. After strong growth in both the company and stock last year, Tesla has gotten off to a rough start in 2024. The stock doubled in 2023, but has tumbled by 25% in just the first 6 weeks of the new year. There are multiple reasons why investors have been selling Tesla shares recently. Because of that drop, though, stock was recently at its lowest level since last spring. Now it makes sense to look at what sent Tesla stock falling below $200 per share and whether this is a good opportunity for investors to buy it. Hmm. Benefits of an EV growth slow down. While Tesla hit its electric vehicle production target in 2023, resulting in 35% growth over 2022. Most of the 1.8 million EVs delivered by Tesla were the Model Y SUV, the best-selling vehicle of any kind globally last year. But there were signs of slowing growth in overall EV demand as the year progressed. Interest rates are one reason. During Tesla's third quarter conference call with investors in October, CEO Elon Musk specifically noted if interest rates remain high or if they go even higher, it's that much harder for people to buy the car. They simply can't afford it. Fast forward to the company's fourth quarter call late last month, when Mosh began to look at the potential gains from a cycle of interest rate cuts that many expect to start this year. We have lots of people who want to buy out cars, but simply cannot afford it, he said. And so, as interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. Advantage Tesla's gained from the deceleration EV demand growth is that large competitors like Ford and Generation Motors have throttled back their EV production plans. Ford CEO Jim Foley told investors his company is rethinking its vertical integration plans for EV and battery production. Should EV demand growth reaccelerate, that will once again give Tesla an advantage on cost. That could lead to a rebound in Tesla's sinking profit margins via increase in average selling price. That will be something investors would cheer. After all, even after it repeatedly cut its vehicle price last year, the company still generated $4.4 billion of free cash flow after spending for future growth. Solar and energy storage. So another thing investors may start paying close attention to is the growth in Tesla's energy business. Its energy storage segment grew by more than 130% in 2023. The increase in deployed megapack storage capacity and energy generation resulted in revenue of more than $6 billion last year. That's a meaningful number, and on the conference call, Musk expressed optimism that growth is here to stay. I think we'll continue to see a very strong growth in storage, as predicted, he said. Owning any stock comes with risk, but Tesla's unpredictable CEO has brought some additional risk to the company and investment. Musk has expressed the desire to own more of the company so that he can have more control over the direction of its effort in artificial intelligence technologies. But a shareholder recently won a lawsuit that nullified the nearly $56 billion package for Musk that Tesla board approved in 2018 that has heightened concerns surrounding Tesla's corporate governance and raised questions about the outlook for board or leadership changes. Hmm. If Musk decides to focus on one of the many other major projects, the stock will likely take a hit. For those who can stomach those added risks, though Tesla's recent dip below $200 per share might present a tempting opportunity to gain exposure to this multifaceted EV leader. If EV growth continues even at a slower pace than before, Tesla is positioned to be the biggest beneficiary in the coming years. Hmm. Hmm. We got Broadcom. Well, today we have overall bearish trend. It's all looking red. Red means all negative. Mm. Ah, this is this one. Shopify earnings revenue top estimate on merchant business growth. Earnings revenue, the top analyst as its merchant business turned in a strong quarter, but Shop stock fell sharply as analysts mulled e-commerce firms' 2024 guidance released before the market opened. Hmm. Three stocks that Kathy Wood bought last week. Hmm. Palantir, Pinterest, and Spotify. Hmm. Hmm. What else is interesting here? Hmm. Okay, let's read this one. Stock market today. U.S. stock falls after inflation cools less anticipated. U.S. stocks fell on Tuesday, sliding away from recent highs as investors digested the hotter than expected January inflation report. The showed prices cooling slower than forecast anticipated. The S&P 500 sank about 1.3% after the benchmark faltered Monday. It's B to keep its historic rally above 5,000 going. The Dow Jones Industrial Average fell nearly 1%, losing grip of a record closing high, while the tech-heavy Nasdaq Composite dropped about 2%. Hmm, okay. Anyway, I'm doing it short tonight. This is it for tonight. I don't see any interesting articles, and I'm just gonna go to bed. Okay. See y'all and have a good night. I'll see you tomorrow. Okay. Bye bye.